very good morning and a happy Monday. Welcome to today's episode of Morning Wealth. We'll talk about three things. All three major indexes at all-time highs, non-farm payroll, bad news is good news, and the week ahead. A relatively grim update on the US employment was apparently just what the market needed to shake it out of a bit of a slumber. The dynamic at play seemed to be that the report, which showed a sharp decline in job growth, spurred urgent comments from both sides of the political aisle in the US, increasing the likelihood of a stimulus deal. The broad market, the S&P 500 gained about 0.9% on Friday. The Dow Jones added about 248 points for a record closing of 30,218. The Nasdaq also was higher, 0.7% on the session. All major indexes closed at all-time highs, the first such synchronization that we've seen since January 2018. Treasuries also ended the week down. The 10-year yields were up 6 basis points to around 0.97. Oil rose while gold slipped a bit. Energy stocks were way out in front, with the S&P 500 sector rising more than 5%. They were also boosted by a decision by OPEC and other oil-producing nations to modestly boost their output. That was greeted as a sign that a long decline in demand may be coming to an end. One of the most important pieces of data that we got last week was November's non-farm payrolls. The softer release should have sent the dollar tumbling lower, but instead the greenback ended the day sharply higher against most of the major currencies. This same strength was also seen in stocks which soared to record highs. US companies added only 245,000 jobs last month, down from 610 in November. This was significantly less than the 468K consensus. That left the US with 9.8 million fewer jobs than in February before the crisis took hold. The unemployment rate slipped to 6.7% from 6.9%, but that was because fewer people were looking for work, a reflection of people throwing in the towel on finding a job or taking themselves out of the labor force to care for homebound children. So why are investors buying the dollars in stocks on a lackluster jobs report? For investors, the silver lining is that the job figures could help push another round of government stimulus over the finish line. Everybody knows that this latest pandemic wave hit the US economy hard, but with local governments crafting plans for vaccine distribution and Congress working towards a new stimulus deal before the end of the year, investors see pent-up demand as the 2021's primary source of recovery. With a bipartisan group from the House and Senate reaching a broad consensus around a new $908 billion aid package, the possibility of Congress passing a deal before it breaks for holidays is looking more likely. Even Federal Reserve officials agree that the surge in virus cases makes the outlook extraordinarily uncertain, according to Powell. Vaccine developments makes him very positive for the medium term. Fed officials too might be more inclined to step up their efforts to support the economy when they meet later this month. And that's why the bad news is actually good news, and that's how the market is taking it. The pandemic is deepening, but record-breaking moves in stocks tell us that investors are unambiguously optimistic. The week ahead is shaping up to be a big week for vaccine news. UK PM Boris Johnson said Pfizer and BioNTech vaccine may start being administered within days. The US isn't far behind, with the FDA set to meet on Thursday to discuss the shot. On the earnings front, Adobe, Broadcom and Lululemon are all up in an otherwise quiet week for earnings. Credit markets are getting ready for a whirlwind of activity this week as companies rush to secure financing before the end of the year. Investors can expect as much as 20 billion of investment grade issuances in what's likely the last sizable burst of deals before the holidays. A batch of data from China, including credit growth and exports, will likely show that the economy is heading into the year end on a positive note. This is according to Bloomberg Economics. But a likely deflationary CPI reading on Wednesday would be a reminder that the recovery still requires policy support. In Japan, Bloomberg Economics expects third quarter GDP to be revised up slightly. Light week in terms of US economic data as well, with only CPI University of Michigan index which is on the calendar. All eyes will be on the ECB. The ECB is certain to ease policy on Thursday. The only question is what form will the stimulus take? Bloomberg Economics is expecting the central bank to increase its pandemic emergency purchase program to 1.8 trillion euros from the current 1.35 trillion euros and prolong the program by 6 months to December 2021. That's the update. Have a lovely day ahead. Have a lovely week ahead, and I'll speak to you tomorrow.